A very warm welcome to everyone. Today we are going to do the topic of consignment account. Now, what is the meaning of consignment? A consignment is a batch of goods destined for or delivered to someone. Consign means to send. Now, there are some terms that are being used in consignment account. The first is the consigner. Who is the consigner? The consigner is the owner of the goods who send the goods to an agent for the sale. And consignee is one who sells the good on the behalf of the consigner. He sells the good and collects the money from the customers, will pay the consigner the net proceeds. Now, what is this net proceeds? That is proceed minus expenses and the commission that is to be borne by the consigner, and provide the consigner an account sales showing all the proceeds and expenses. Now, third is goods sent on consignment. Now, what is this goods sent on consignment? Goods sent on consignment are the property of the consigner until the goods are sold. And the consigner should include all the unsold goods on consignment in his closing stock. Now, the consignment account has two parties. One is the consigner, another is the consignee. So, the owner of the goods is also known as the principal, is the consigner, and is the seller of the goods is also known as agent. Now, what does they do? Now, consigner sends the good to the consignee to sell them on his behalf on commission basis, and consignee does receive the goods from the consigner, sell to customers on cash or credit basis, and get commission and reimbursement of his expenses. Now, there are some different types of commission that is given to the consignee from the consigner under the consignment account. Such commissions is paid in lieu of the service rendered by the consignee in form of selling the goods. Theoretically, there are three types of commission. If we talk about in consignment account, we give three type of commissions are given to the consignee. First one is ordinary commission. Now, what is this ordinary commission? Ordinary commission is the fixed rate of commission paid by the consigner to the consignee. That is, it is calculated on the total sale made by the consignee. Second is del creditor commission. Now, what is this del creditor commission? It is a special commission given by the consigner to the consignee. Generally, consignee is not allowed to sell goods on credit basis. But if he is allowed to sell goods on credit basis, he is held responsible to collect money from the debtors. When this commission is paid, the consignee has to bear the loss of bad debt. That is, in case any bad debt is there, the consigner will not bear that loss. That loss will be bared by consignee. But in return, consignee is getting a special commission that is called del creditor commission. So, this commission is given to him to collect the proceeds from the debtors. Next is the overriding commission. Now, what is this overriding commission? Commission given to consignee in addition to normal commission. Purpose of such incentive is to motivate the consignee to create market for new goods. Sometimes this additional commission is allowed to consignee where certain sales limit have been exceeded. So, to create new market for the consigner, a special commission is given that if he does the sales beyond the target given to him, a commission is given that is called overriding commission. Now, Proforma invoice. Now what is this proforma invoice? It is a document that is prepared by the consignor in respect to the goods that are being sent to the consignor. It contains the details with respect to the quantity of goods sent, rate at which the goods are sent, and other terms and conditions for sending goods on consignment. This is the, you can see example of proforma invoice, where the name of the consignor is there, name of the consignee is there, the amount of the goods that are being sent over here, and what is the quantity of goods that has been sent. So this is a proforma invoice which is sent by the consignor to the consignee, mentioning the details of the goods that are being sent to the consignee. Now next term that is used in consignment account is account sale. Now what is this account sale? Account sale is a statement that is prepared and sent by the consignee to the consignor. Now it contains the details with regard to the quantity of goods received, sale made, expenses incurred, commission, amount sent, and balance payable by the consignee to the consignor. So account sale, basically, see, a proforma invoice is prepared by the consignor and account sale is prepared by the consignee, mentioning the details of the sales that has been taken place, and he is giving the detailed mention of those proceeds to the consignor. Now what is the difference between proforma invoice and account sales? It is prepared by the consignor and sent along with the goods sent on consignment. The instrument contains a description of goods, that is quantity, price, weight, kind, and other specification. And it is a declaration by the seller to provide the products and services to the buyer on the specific date. On the other hand, account sale is a report or a statement that shows the price at which the goods are sold, expenses incurred by the consignee on the behalf of the consignor, consignee, commission, and net balance for which the consignee is liable. Now you can see this is the proforma of account sales, the statement of account sales statement of consignee. That is, on the one side the sales is given, then from the sales we have studied earlier also, he'll deduct the expenses and commission. Then if any advance that is being received by him on the behalf of the consignor, that also will be deducted from this, and the balance due will be enclosed in the draft and sent to the consignor. Now there are sometimes question arises, what is the difference between consignment and sales? So the basic difference between consignment and sales is that in consignment we know that there is one agent and one is the principal, and goods are delivered by the principal to the agent for the purpose of selling. But in sales the goods are delivered to the agent by the owner for the specific purpose, right? Then there are two parties involved in consignment, one is the consignor and another is the consignee. But in sales the parties are named as seller and the buyer. Now in consignment the relationship between the parties is of principal and agent, and in sale it is of debtor and creditor. In consignment possession is transferred but ownership is not transferred until they are sold to the final, that is the principal is giving the goods to the agent to sell on his behalf, but the ownership will remain with the principal until and unless the goods are sold to the final consumers. But in sales the possession and ownership both transfer. Then consignee can return the unsold stock to the consignor, and the buyer cannot return the goods to the seller until and unless there is some agreement in that same. Then risk of loss is borne by the consignor. Who is to bear the risk of loss? Consignor. Then risk of loss is borne by the buyer. Then expenses incurred are met by the consignor and the expenses incurred met by the buyer. Consignor is consideration is the commission for the agent, consideration is the profit for the seller. Now we are going to do the accounting treatment. following are the transaction and what will be the entry in the books of consignor and the consignee. Firstly, when the goods are sent of the consignment, obviously there will be no entry in the books of consignee, but consignor will make the entry consignment account debited to goods sent on consignment. For the expenses incurred by the consignor, again consignment account debited to bank, but no entry in the books of consignee. For the advance paid by the consignee, then bank account debited or bills receivable account debited to consignee, and the consignee in the books of consignee, consignor account debited to bank. When the consignor gets the bill discounted with the bank account debited, discount account debited to bills receivable. Obviously there will be no entry in books of consignee. Then for the expenses incurred by the consignee, the consignment account debited to consignee, because the consignor has to pay to the consignee, and the consignor to bank will appear in books of consignee. For the sales made by the consignee or consignment debtors account debited to consignment and bank to consignor. For the commission payable to the consignee, consignment account debited to consignee account and consignor account debited to commission. For the consignment stock, that is unsold stock, consignor will pass consignment account debited to consignment account, then there will be no entry in the books of consignee. For the profit, consignment to profit and loss. For the loss, profit and loss to consignment. For the abnormal loss account debited to consignment. All these entry will be passed only in the books of consignor, not in consignee. Now, for the removing unloading in invoice price, when the goods are sent on invoice price. When the consignor is sending the goods on the invoice price rather than cost price, the consignor has to unload that price. Now, how will you do that? He will ask the entry goods sent on consignment account debited to consignment account. And for removing the loading of invoice price in consignment stock, that is unsold stock, again consignment account debited to stock reserve, consignment stock reserve. And for the DEL creditor commission, bad debt to be borne by the consignee. If the bad debt is to be borne by the consignee, bad debt account debited to commission. For the DEL credit commission not paid by the consignor or loss to be borne by the consignor, then bad debt to consignment debtor. Now here the terms and conditions will be clear. Who is going to borne the loss of the bad debt? Now we have to do the valuation of the closing stock. For the valuation of the closing stock, first of all we will calculate the value of unsold stock. Then in that we will add proportionate direct or non-recurring expenses of the consignor, and then we will get the valuation of consignment or closing stock. Now there are some note to be remembered, that all the expenses incurred by the consignor are included in direct expenses, and in case of consignee, till the goods are reached to the godown of the consignee, the expenses incurred are direct, rest will be indirect. Is it clear? All the expenses incurred by the consignor included in direct expenses, and in case of consignee, till the goods are reached to the godown of the consignee, the expenses incurred are direct, rest will, after the goods are been reached to the godown, the expenses become indirect. Now there is a special treatment of abnormal loss. This type of loss is unavoidable. This type of loss is unavoidable. Now why this loss is unavoidable? Because it does not arise due to the nature of goods, but such loss may be arise due to hard luck of the consignor, that is destruction of goods by fire, accident or theft. Such losses are more or less abnormal and in case do not occur frequently. Now it do not occur frequently means That is, this type of loss is avoidable. Why this loss is avoidable? Because it does not arise due to some natural thing. It is arise due to the human nature or human loss. So like destruction of goods by the fire, accident or theft, such losses are more or less abnormal and it does not occur frequently, right? But if there is any leakage, it occurs in most of the cases. But theft happens every time? No. So those losses, those don't occur frequently, comes under the category of abnormal loss, right? So for the calculation of abnormal loss, it is similar that how do you calculate the consignment stocks? The same calculation is done in case for abnormal loss also. Now, what is the invoice price? Invoice price means when the consignor adds a ratio of profit to the cost price, it is called the invoice price. That is why the unloading of invoice price takes place in order to arrive at the actual profit. So you will have to unload the invoice price when the goods were sent and for the closing stock. So what all ledger accounts will be prepared in the books of consignor, consignment account, consignee account and goods sent on assignment? 3 types of accounts will be prepared by the consignor. And the books of consignee, the consignor account, commission account will be prepared in the books of consignee. In the books of consignor, we have already discussed, these are the formats that has been discussed. So that's all for today. So I hope you are able to understand the concept of consignment account. Thank you.